Julian, Demelza, thank you very much for the presentations. Super interesting. This panel discussion is called Uncovering Blockchain and Crypto Myths. And there's a reason for that. I think once we have a certain thing in our mind, once we hear something and information and the thing changes, it's super difficult to change our thinking, right? The first information point that we get a lot of times sticks. And I think that's also a problem with Bitcoin and blockchain. And that's why this panel discussion is called Uncovering Blockchain Myths, because there's a lot of myths around. I'm sure you all know. So let me start a little bit simpler. When was the first time you guys heard of Bitcoin? Demelza?
Oh, that was 2013.
Wow.
I was in India working for the U.S. Department of State, and I was on a research scholarship to study microfinance, and they were all in these self-help groups because they were unbanked. Mm-hmm. And I started doing research online, and at that time, Bitcoin had no fees. This was, early on when you could submit transactions to the blockchain network without a fee in it, and it would still get picked up by miners. Mm-hmm. And Bitcoin was, touted as a solution to the unbanked problem in the world, and that's how I got interested in it, basically. Yeah.
Julian?
That's such a nice story. I can't top that. It was 2015 when basically a friend of mine introduced me to this magical internet money. When he said he was totally like the tech nerd and I was totally not. So I was a business student. He was an informatics student, but we used to hang out together, and we were young, like beginning of 20s, and he was playing around with these different coins, Bitcoin amongst other, but there was already Ripple and kind of other funny coins with funny names and funny logos, and then he was kind of trading all of them, like dozens of them. He was trading, prices went up and down, he made money, he lost money, and this kind of also got me interested because I was already interested in finance, and so I bought my first Bitcoin through him, because it was too complicated for me, but he made it happen somehow. And then I was kind of texting him every day, like what the price is doing. And when it got up, maybe 10, 15%, I sold again. Stupid me. But this was the first kind of interaction I had with it. Then after 1 or 2 years, because I thought this was just playing around, right? I didn't think this was something serious in any way. But then, like 1 or 2 years later, end of 2016, beginning 17, when it still was around, it got me really curious. Like, okay, maybe this money that is independent of banks and governments could actually be quite interesting beyond just short-term trading. Mm-hmm. And then once I understood that, I was basically all in, also from my career perspective.
Cool. Now, one of the most frequently asked questions that I hear a lot of times is, what is Bitcoin? And not only like, how does it work? I agree with you. You don't have to know all the details probably if you use it, right? But the question is more like, in your opinion, Demelza and Julian, is it a currency? Is it an asset? What is Bitcoin in your view?
Well, I am, okay, so I'm going to probably, upset a couple people that think Bitcoin should be used to buy coffees. I think it's interesting, with the Lightning Network, but Bitcoin is the hardest asset we have ever made. There's a supply, and you cannot change that supply. I don't know why anyone would spend Bitcoin right now. I spent Bitcoin, early on. To buy things online, and I've paid thousands of dollars for. I bought a hair blow dryer, and the last time I checked my Bitcoin, it was $2,500 it cost me, and that was in 2017. So that hair blow dryer probably cost me about $20,000 at this point, at least, maybe more. And I wouldn't spend that ever again. I hold all my Bitcoin forever. The only thing that I suggest really is that it's the layer one, just like how gold was the layer one. Then we had paper certificates, which was the layer two. And that was basically how we spent. We hodled the gold, we spindled the paper certificates. Mm-hmm. And I think that's what we're doing with Bitcoin. I think that eventually we're going to have, Bitcoin as a very strong hard asset, sound money system, and then we're going to have fiat and stable coins linked to fiat, which we spend.
You maybe quickly, you mentioned the Lightning Network. Could you quickly explain what that is? Because a lot of people still tell me like you cannot use Bitcoin to transact, right?
Sure. Well, so Lightning Network is basically this set of protocols that are built on top of the Bitcoin blockchain. And what it does is it kind of allows you to open up a log of transactions with other people. And when you decide that you want to, close that conversation that you're having, maybe it could have, hundreds of transactions in there, thousands of transactions, and you want to actually broadcast that to the Bitcoin blockchain, then you pay a fee. But all of it that goes on in those channels is basically not broadcast on the main Bitcoin blockchain. So, you basically pay a fee to start the channel, you transact with someone back and forth, and then when we're ready to close that, we can broadcast it and make it a permanent record. And you have, entities that are large that are trying to basically allow many channels to exist and to allow the liquidity to grow within those channels so that you can send, higher transaction amounts through those networks. I think the last time I checked, the network's capacity was up to 125 million about. It's still, as René Pickard and Christian Decker, researchers from ETH and Germany, as they've pointed out, there's still a lot of problems with Lightning that are being worked out. But on the other hand, you have people like Jack Mallers, who did the El Salvador wallet, and you have people like Jack Dorsey from Twitter that are literally trying to build the nicest user interface for Lightning Network so that anyone can just basically use their phone with just a couple clicks of a button to buy a coffee. So that's kind of the direction we're going in. We're working on the user interface, and whoever hacks that, whoever gets that user interface problem fixed is going to be laughing. I mean, their market cap is going to be the biggest one we've ever seen of any of the crypto projects. So, yeah.
So in short, it's basically one way to deal with the shortcomings of Bitcoin, of like when people say it's super slow or it's super expensive, the transactions. It's one way to deal with that, right?
Julia, it's also maybe to pick up on that. It's also it's not like fixing problems of Bitcoin. It's scaling Bitcoin, right? Yeah. So Bitcoin is a very new technology still. It's only a bit more than 10 years old, and the base layer has never been designed to process thousands of transactions per second. It has been designed to be, as Dem also said, the hardest, best money base layer with the best monetary policies. And now, on top of that, we scale this thing. And how technologies, and especially open source network protocols, scale is in layers. So again, the comparison to the internet is not one protocol. It's a layered protocol. There's actually 7 different layers, software layers on the internet. And that's exactly what's happening now. We already have like 3 layers on Bitcoin, and there's more and more on top of this. And the potential of the Lightning Network of scaling Bitcoin is huge. For example, now what the critics say is that, oh, it's very expensive. It can cost up to $1 per transaction, and it's slow. It can take up to an hour to actually settle the transaction. Well, and the throughput is very low, so you can only make 7 transactions per second right now with the Bitcoin base layer. That's true, but this is comparing like the base layer of it with a whole fully fledged financial system that we now already have. What we can do with the Lightning Network already now is you can send Bitcoin from A to B for 1 cent or even less than a cent. You can do it instantly, and not only sending, but actually settlement is instantly. Like if I buy a coffee with credit card in Starbucks, the settlement, it's instant. I buy it instant, but the settlement takes 3 to 5 days and has like 3 to 5 different intermediaries. With Lightning Network, it's instant. It's 1 second, 1 cent, and there are 1 million transactions possible per second. If you compare this to Visa, MasterCard, for example, it's around 50,000 per second. Mm-hmm. So it's right now, it is the Bitcoin network as it is right now. It's not comparable to the traditional financial system, but once it's scaled with one or two layers like Lightning, for example, it's going to be way more potent and with way more capacity than anything that we've ever seen.
Interesting. So I would say that already also answers the previous question, right? Whether you think it's a currency, it's an asset, what it really is. Or do you have anything that you want to add there?
Well, for me, it's savings technology. It's the best savings. The Bitcoin is the best savings technology that we've ever had. So
savings.
Savings, yeah. So okay. To store value, right? Yeah. Like gold, for example, as the Melissa mentioned, the gold is a savings technology as well. We use gold to put our capital that we've earned. We want to put this somewhere where it doesn't lose purchasing power. Well, if you put in on the US dollar, you for sure lose 8% in purchasing power per year for inflation, and then you pay some banking fees and you pay negative interest rates most likely. So in real terms, it's more like 10% that you lose every year. With the euro, it's like 5-6%. With the Swiss franc, it's around 2 to 3%. With Bitcoin, you actually gain purchasing power because it's the only asset that is actually scarce. There's only going to be 21 million. There's never going to be more of it. There's always going to be more demand. And so it's really designed as a savings technology, as a store of value. And then this is probably the beginning of making it even the base currency of our whole world and the basic financial system, because we want to build a financial system on a solid base. And this is the most solid base that we've ever had.
Okay, but then the next question is like, where's the source code? And could someone potentially say, you know what, we've reached 21 million, which doesn't make a lot of sense because I think that will be reached like in, I don't know, hundreds or thousands of years, right? Based on the computing power. But let's say someone says, I think the value is going up, let's change the source code and double it. Would that be possible? In theory?
I'll take a stab at this one. I think in theory it would be possible, but you'd have to have the majority of the network agreeing to that, right? And basically doing a type of hard fork on the code. And I don't think that a lot of people in the network would agree to that because it would make the price drop of the asset. So a lot of the people are invested heavily in it that are mining, so I don't think they would agree to something like that, and I think that's how Satoshi designed the game theories to make sure that attacks like that couldn't happen.
Okay.
But
absolutely. I mean, in today's world, it's very easy to print new money. You just have one committee, like the Fed for the USD, for example, or the European Central Bank for the euro, and they can just decide, oh, I think it's a good idea to print like 20% of the whole US dollar amount. This is way harder in Bitcoin. It's technically feasible, but as Demas said, like the game theory and how the network is designed, it's most likely never going to happen because the people or the institutions who could decide it, they would need to find the vast majority, like 80% of them would need to decide, okay, there's not going to be 21 million, we change the code and there's going to be 42 million. And why the hell would they do that? Because they know we would lose the purchasing power of the game that we are playing. That's the funny thing. It's actually a game. It's not even. It's a great technology, but it's even more a social mechanism that everyone who plays the game wants it to go on, right? Because they're invested. And if they stop playing the game, then maybe they want to kill it, but they don't have a say anymore. So that's the interesting thing. So I don't think it will happen.
Even if a regulator wanted to attack it from that angle, everyone that sees that would just leave to a new chain, and move out, and it would start all over again. So they would keep wasting resources trying to shut down blockchains from that angle. So I don't think that's a sustainable attack vector.
Okay.
Yeah.
Okay. I mean, that's a very fair point, and just to let you guys also know, I'm trying to play devil's advocate here. So another very common question is, okay, I understand there's 21 million and they have value, obviously, right now, but where do they derive that value? I mean, obviously, we can say it's a demand-supply thing, but a lot of people will counter and say, what is it backed by? Tough questions, I know.
And you want to go first? You're the expert in this.
Oh no, you should take this one. This one's a hard one.
Okay,
I can give it.
There's so many angles. So
Yeah,
let me try to
there's so many
start. So let's compare it to other assets that also have value, but and where do they get the values? Like, for example, gold. Gold has value for thousands of years. Some of it is derived, a small part of it is derived from industry, like they're used in chips. Some of it is luxury, they're used in watches or other luxury. But this is actually 10 to 20% of the whole 9-ish billion of the market cap of probably trillion. 8 to 9 trillion market cap of gold. The majority of it is just because it's a great store of value. The monetary value is way bigger than the actual industrial value, right? And that's exactly the same thing where Bitcoin derives its value. It's just designed to be a great store of value and it's scarce and it drives a lot of demand. And if the demand is going to be higher and higher at a supply that is fixed, then obviously the price and the purchasing power will go up, and that's why more and more people use it. So it's really, and that's the interesting thing, it's the only asset that is actually you can only use it for storing value. And it's the absolute best in doing that, but only that. Gold you can use for other things. People store value in everything now because they don't really have a store of value asset. They store value in real estate, they store value in art. They pay fucking 60 million for an ape they want to store their wealth somehow in something that they think it might become more valuable in the future. But what Bitcoin tries to do is it says, okay, look, you can use me to store value. You don't need to store value in stuff like real estate where actually people just want to live. It's not about storing value. So this is kind of the end idea of Bitcoin, just to suck all the monetary value in the world to it. And so that's where it gets value, just by its design and being scarce and being a reliable store of value.
Yeah, I think also another perspective could be that it's like a network, and like every network, the value increases with the network nodes. I think that could also be a very interesting way to explain its value. The more people use Bitcoin, like if there's only one person having or using Bitcoin, it has basically no value. If there's two people, it already has some value. And if it has 1 billion users, then it has a lot of value. That's one way, I think, also how one can explain the utility and also the value of Bitcoin.
Just to add to what Julian said, I mean, right now we see real estate prices are growing, to the point to where people can't afford to buy homes anymore. Now we see commodities, even things like wheat and other things that we eat that we need to use. The prices are growing substantially, and that's because we don't have a store of value. We don't have a good one. So we shouldn't use real estate because we actually need to use that. And so, like Julian said, the beauty of this is that we don't actually need to use Bitcoin for anything else but being a store of value.
Mm-hmm. I would like to open up. Are there any questions from the audience? If you have any questions, just raise your hand and the microphone. Wait until the microphone is with you. I see a question over there. And please try to keep it short.
Thank you very much. Is this on?
Yes.
There we go. I was just wondering if anybody in the panel could comment on, let's say, the Fed coin that's being floated again and again. So a federally controlled Bitcoin. From what you've been saying, this would defeat the purpose, but it seems to have quite a few adherents.
Could you maybe quickly explain what the Fed coin is?
As far as I understand it, the Fed coin is a proposed blockchain-based currency that is controlled by the US Federal Reserve. It's being floated again and again as a potential way of regulating this.
So basically a central bank digital currency, right? Yeah.
Basically.
Okay. Mm-hmm. Any comments? I have absolutely no idea.
I mean, my first thought would be, is it wholesale or retail? Is it where they basically want to allow people to have accounts with the central bank directly, or is it a is it a cryptographic, version of what we currently have? I'm not sure. I haven't read if the Fed coin's going to be wholesale or retail. I'm guessing it's going to be wholesale because, 80% of the CBDCs out there are wholesale, where essentially, a lot of commercial banks will have accounts with the Fed, and it still won't be, the Fed directly holding wallets with each individual in America. But it'll still be the case where individuals hold the account with a bank, and then the bank holds an account at the Fed. And if that's the case, I don't see a lot of change from our current financial system. They're still going to have the ability to, use fractional reserve banking and do lending and, open market operations. And so I think that if it's a wholesale CBDC, that's not going to change so much. And I think people would still have all the problems with the inflation that we have. And maybe it could be even worse because, now there's kind of like a trickle-down effect where, the money gets created, digitally, and then it has to kind of work its way through the economy, and it takes some time for it to make prices increase. But if you had, this all on the blockchain, I think it would be even easier for them to increase the supply of money if there wasn't, other nodes in the network that were somehow, having to agree to these increases in the money supply. So, yeah, I think, that's not going to stop Bitcoin.
I agree. It's like the other, you mentioned it, CBDCs, so central bank digital currencies. All of the central banks are basically working on issuing their own blockchain-based currencies, like the euro will be on a blockchain, the one will be on a blockchain, US dollar will be eventually on a blockchain, because it makes it more efficient. So it's basically digitizing the fiat currency that we already have now, but it's not gonna, it has the same properties, just digital, but it's not gonna compete with Bitcoin, because it's still going to be controlled by the Fed. It's still printable. It's still censorable, even more actually. It's easier to censor, and these are the reasons why. Because it's scarce, because it's uncensorable, and so forth. That these are the reasons why people store their value in Bitcoin and not in USD. And just because you put a USD on a CBDC or on a blockchain, it doesn't change the fact that it's not a good store of value.
It's actually a more centralized system than what we have already today, right? It's even more centralized.
Absolutely.
Yes.
Any other questions? There's a question over there.
There's another one over here. Sorry.
Oh, very good.
I snatched the microphone. I'm a total beginner in Bitcoin, to be honest. One of the questions that comes to my mind is one of the big advantages you just raised before was that you can relatively easily make funds go pretty much everywhere, whereas in the current system with fiat currencies, you have a tight control. And what comes to my mind is how do you deal with sanctioned countries, where, of course, we can ban entire countries from the SWIFT system? How do you deal with terrorist financing or AML-relevant questions?
I think we get very political right now. I don't know, do you guys want to answer that? Because I'll leave it open to you.
I just think every technology is going to be used by criminals and by good people. And we shouldn't shut down technology because criminals might use it. I don't think it's going to be so easy to sanction entire countries if we're using blockchain cryptocurrencies, but there are ways with chain analysis and doing analysis of the blockchain to find out patterns. And actually, there was a big sting operation in Afghanistan last month where the Taliban had many wallets that were basically confiscated somehow. I'm not exactly sure, but they were stolen. So there is activity to find out who's using these accounts and try to make efforts to stop that. But I think that if we just say, well, criminals are going to use this, so we have to just shut the door, I think that's going to wipe out all the great benefits to society that we're also going to have.
So clearly what data shows today is that the majority of money laundering or terrorist financing and all these criminal activities is done by fiat currency, mainly with cash. Cash is still the best thing how you can do that.
Good point.
And also just fiat currency. I mean, we read about Credit Suisse and all these big scandals and these billions that they need to pay because of money laundering and working with sanctioned people and oligarchs and whatever. So this is still the biggest use case for that. And yes, you can do to a certain extent this with Bitcoin as well. But remember to go from the traditional financial system, the fiat-based system, into Bitcoin and vice versa with significant amounts of money. It's always very regulated process. So you can't just earn 1 million with drug dealing and then put it into Bitcoin very easily and then it's anonymous. This needs to happen through a regulated exchange. And from there on, because the Bitcoin network is transparent and you can track, every one of us can track every transaction, it's actually not anonymous anymore. You can trace that, and that's what chain analysis and software-based systems do exactly, and they're in use for banks and a lot of financial institutions exactly to prevent that. So it's actually even easier to prevent it than with the fiat system, but it will always kind of happen, and every technology will be used in both ways. That's true.
I think there was a question on the other side, or here's a question, Patrick.
Thank you. Very interesting. So I'm self-employed in the crypto space since almost 1.5 years, and thus unfortunately lost a little bit of touch with the classical workforce. So my question is, have you seen a change in attitude within C-level management and upper management when it comes to cryptocurrencies? Because what I remember from 2 years ago, I would hear again and again that crypto is it's used by criminals. It's partially, I heard, it's a scam. It's insecure. It's a very unsafe investment. Don't touch it. Has the tenor changed in the meanwhile?
I think so, yeah, heavily. Like 2017, it was really the black sheep for every, especially in the financial services industry. Like no top level management wanted to have to do anything with it. Now this has totally changed. Now it actually has been seen as it's seen as a great revenue stream for them, because like early movers like Swissquote, for example, or Marky Baumann in the private banking industry, they're making shit tons of money with it now, because people like to trade, because especially young people, millennials and Gen Z, they like to trade and they like to pay a good price for it. So Swissquote is making a good part of their profits now with crypto trading, and that's kind of what the other top management boards are waking up to. So they now know, they feel the sense of urgency, and they know with the traditional financial model, like the margins are always like shrinking to basically zero. The rates, interest rates are basically going to zero. So they need to find new revenue streams, and they see Bitcoin and crypto as this new holy grail to attract younger generations of customers and make great new revenue streams with it. So this has totally changed from we don't want to have anything to do with it to please tell me how I can get involved.
Yeah, I think in crypto, what I see a lot of times is like people go through a journey, a roller coaster. The first time they hear about it, it's like, oh, it's interesting. Then they read a little bit about it and read about the shortcomings and about money laundering and that it's slow, and energy consumption. We didn't even talk about that. And then they're like completely against it. But those are actually very surface level things, and if you read more about it, you will quickly realize that there's like a universe a universe really that you haven't discovered, and then you become again like very pro this movement. That's something that I'm also seeing. But also, I think later today we will talk a lot more about that topic, that exact topic, in the next panel discussion and also in the next section. Shall we do one final question? There's so many. The gentleman in the back, Mauro.
I was wondering what do you think about the competition between the different coins? So you said there is, you can't really have like, there's a limited amount of Bitcoins you can forge, but there is like with every ICO, there's kind of an increasing supply in digital money. Isn't that also kind of like contradictory?
Well, you have, I mean, each cryptocurrency is secured basically by how much is invested in that cryptocurrency. So even though there might be a lot of different cryptocurrencies that come into existence on any given day, they might be easy to attack and do a double spend and therefore, you know, break the agreed upon consensus on that blockchain and basically cheat and create, you know, units. So there's not a lot of competitors to Bitcoin in terms of security of the network. Yeah.
Totally, and they're not comparable. Like they're different. Every new currency, be it one of the splits or forks of Bitcoin, there are dozens of them, maybe even 100, like around 100 forks of Bitcoin. They're called Bitcoin Cash, Bitcoin Gold, Bitcoin whatever. Or be it a total new currency like Ripple or Solana or Dogecoin, Shiba Inu coin, whatever you name it. They're different. They're total different currencies, different animals. So why this would not, just because you have one cryptocurrency and then you create another one, doesn't mean it increases the supply of this one. So it's like metals, different precious metals. You have gold, and just because we discover silver, this doesn't change anything in the supply or in the design of gold. So there are different precious metals, like there are different cryptocurrencies, but they're not dependent.
Exactly.
Or they don't change anything.
Yeah, that also kind of brings me back to this network idea. Like, you have Facebook and Instagram. You can start your own network, but if no one is on there, it doesn't really decrease the value of the other network, which has where everyone is on there, right? I think that's also one way to look at it. Well, time's up. Time flies. I would like to ask you to applaud Julian and Demelza, because they didn't have an easy job. I made it really, really difficult for them. I have a really bad feeling. I'm really sorry. I had to play devil's advocate, but you did a really good job. Thank you very much for joining us. Thank you.
Thank you.
Thank you.
Thanks.